power of one conversation is everything that we're going for over these next 2 days. So simple things I just want to ask from an attendee perspective. When you hear us dinging the bell, if you can please come back into the room, that would be really helpful for us. Everyone needs to download the app because that's where we're going to be communicating through to you, and also that's where it's got listed all the different sessions and if there's any changes throughout the event. And obviously my team will be happy to help in any way we possibly can. And create the story with us. Hashtag Emergence 2019. Please post on Twitter, please post on LinkedIn, so you'll see that lighting up over the next 2 days. I just want to say thank you again. It's absolutely insane for me to see how many people are in here and see people standing out the back to be a part of this event. I said, we want to do everything possible to serve you over the next 2 days. We also want to try and make sure you get as many introductions as humanly possible. And also we want to make sure you meet as many of the exhibitors and as many of our sponsors as you possibly can. Said, they all provide tremendous value to the ecosystem. And on that note, welcome to Emergence. And please welcome our first guest speaker for today, and thank you to our support partners as well, of course. Hope no one gets offended on that one. As I said, you do not do this without support partners. Actually, who actually got introduced by one of these partners for the event, out of curiosity? Okay, quite a few at the back. Look, said it does not happen without, in doing something like this, there's just so many spinning plates to pull it together. So thank you to everyone involved. There's the lineup for today and the floor plan. Okay, that's also in the map. You've got the education room down there. You've got the exhibition room in the corner, which is where we'll be serving food. Okay, so we said, make sure you meet with every single company in that room. And for the VIPs, obviously we've allocated the VIP room for you as well. Now, I've already said enough about Fran. Fran is one of my favorite people to deal with. Fantastic personality, incredibly intelligent, and literally when no one was looking at this space, he's gone and built a business now with 100+ staff that are focused on completely building the infrastructure related to blockchain and crypto and the opportunity that enables. And for any of you that are curious, and people think that because it's a crypto winter, that all of a sudden that this development has stopped taking place. That is absolutely not the case. In fact, people are working harder, and it just gave them some breathing time to actually move forward. So on that note, please welcome our guest speaker for today, Mr. Fran Strainer.
All right.
It's his birthday soon too.
Whoever said that, good memory. Thank you for the glowing introduction, as always, Steve. I love coming to these events. I see that they're growing exponentially, just like the technology we'll be talking about over the next couple of days. So my name is Fran Strainer. I am the founder and CEO of Techemy. Techemy is a venture builder or investment bank. We own and operate several companies that we view as infrastructure to help scale this nascent new asset class. So that permeates right throughout all of our branding and our ethos and our company culture. This is a 16th century etching of an alchemist on a laptop. So we're trying to be the bridge between the old world and the new world by creating connectivity and exchanges and infrastructure and wallets and a range of different assets, which I'll get into. So I discovered Bitcoin in 2010, and it was like magical internet money. It didn't really do anything. It was kind of crazy and unorthodox, and there wasn't really much to it. So I largely ignored it, and I reread the white paper in sort of Q1 2013, and I realized, wait a minute, this is a whole new asset class. Right? This is a fourth superclass of assets. I'm sure you're all familiar with capital assets like equities, bonds, income-producing real estate, etc., and consumable, transferable assets, commodities, precious metals, and stores of value. Again, precious metals, currency, fine art, etc. And along comes this digital value that has properties of everything from before, but it's distinct enough to have its own classification. So we actually spent a good 18 months putting together an entire classification system and taxonomy, and that's really helped us flesh out our entire thesis of how we approach what we do in this asset class. So as humans, we like to think linearly. There's something in our circadian rhythm that's kind of hardwired to think about a steady pace of things. The moon around the earth around the sun, etc. And then technology comes along and it's quite exponential. But as you'll see in the early days, it looks like it's slower and not really doing much compared to other technologies and verticals. And so we call that the deceptive stage, and that's the exciting time to build products. Now extrapolate that out into the blockchain space, and it's not always a straight line. From 2010 to 17, we had this crazy rally, particularly in 2017. And really what's happening is that we're going through a process globally of the digitization of value. It started with Bitcoin trying to represent an M2 money type, currency. Really it's a store of value like digital gold, and that is very much a killer app. It may scale to become an M2 money type in the future. But since then, we've seen the largest experimentation in monetary policy the world's ever seen. There's all sorts of asset-backed tokens representing gold, cobalt, diamonds, whatever, available now. And we're seeing smart contracts kind of create complex new exotic derivatives or decentralized derivatives and assets. And I'm not going to get into decentralized autonomous organizations today, but I will touch on, I've got a whole workshop on security tokens or non-fungible tokens. So because this is global, it gets exaggerated. It went way too high, way too quickly, and every script kiddie with an idea on a napkin raised $20 million in 2017. All those companies must die, right? So this is the winter that we all needed, and the survivors will hopefully be the next Amazons of tomorrow. So I like to use this framework at Techemy called the 6 Ds, which is by a gentleman called Peter Diamandis. So once something is digitized, it takes a while for it to do something while that infrastructure is built out, so it looks very deceptive. But then ultimately there's enough infrastructure to actually gain access and distribute and power applications that are disruptive. And then it goes through this dematerialization, demonetization, and then ultimately a democratization. So as a quick example, 3D printing, what's being digitized? Manufacturing. It was invented arguably 35 years ago, so it was very deceptive. It took a long time, and it didn't really start to disrupt until 5 to 7, 8 years ago, when essentially the infrastructure was good enough to start manufacturing useful parts for the space industry, the automotive industry, and it's really dematerializing inventory. It then demonetizes in the sense that you don't need to carry inventory, and ultimately democratizes. So if I need a part for some machinery, I could order it locally, and I don't need to know that the guy I ordered it from, he didn't import it from Germany or wherever. He might have 3D printed it locally, right? So I can build locally on demand, which is pretty interesting. Now, I'm sure you've seen illustrations like this. This is the result of the 6 Ds, where all these things now fit into your pocket as they've been digitized and gone through this process. So at Techemy, we pay a lot of attention to when something is actually breaking out of that disruptive phase. We like to build products as close to it breaking out as possible so that we're not sitting around twiddling our thumbs wondering where are all the customers, but early enough so that when the tsunami of interest does come, as we've experienced in the first wave in 2017, everybody calls us and everybody wants everything. So we end up with a larger market share. Of course, we look at sort of conventional life cycles as well. I believe that the 2018 through to now winter in the blockchain space is essentially the first crossing of the chasm of risk in the sort of entrepreneur speak. And there's a long way to go, but we're relatively early. And another important plot point to kind of look at, instead of just the values of these coins moving up and down, is how many households use this technology in a meaningful way on a daily basis. So it took a while for all of these technologies to get adopted, and then they ended up having pretty much 100% sort of adoption rate throughout Western societies. And that's what we're looking for with blockchain and cryptographic assets. That minimal viable infrastructure for it to really shoot off and start being adopted and used. Grandma does not need to know that there's blockchain inside. She just wants free and instant payments from one bank account to another. So I want to take you for a quick journey of what I've seen, just for the different epochs of this crazy space, just to contextualize where we've been, to show you where I think we're going. And in the really early days, there wasn't many different types of participants. There was really the cyberpunks and cryptographers, computer scientists, and there was no medium of exchange that was formal. It was all internet relay chats and forums. The next epoch, Bitcoin kind of hit like $30, and it was early tech adopters. It was the ideologically driven anarcho-capitalists like Roger Ver and many other sort of famous names in the space. And still, no good infrastructure to participate and use this technology or get involved and invest. The third wave is the early adopters. And we saw Bitcoin through the Cyprus bail-in sort of hit $250 and then rally all the way up to 1,100 and subsequently crash back down to under $200. And we saw the early retail and early institutional investors coming into this space. And that was because we finally had the first few formal on-ramps, exchanges like Mt. Gox and Trade Hill in the early days of Bitfinex. The fourth wave, the early majority, the 2014 to 17, Bitcoin exceeded all our expectations, including mine. I thought it would hit $10,000, but it just kept going. And that was the early majority of retail and institutional investors. And I'm sure you're all aware of how badly Silicon Valley kind of FOMO'd into the whole ICO craze. It was absolutely ridiculous. But we did see a rise of infrastructure, right? So we had like 160 exchanges by the end of 2017. So basically on-ramps and off-ramps in each country to be able to participate, consume, purchase, sell, whatever, a variety of different digitized assets. And the beginnings of more formal financial products and services like over-the-counter trading desks and the CBOE and CME futures contracts. Now, here's sort of getting into the future. I think Bitcoin is going to do it all over again. Like there's so much being built on this technology, and there's a constant hard-coded reduction in supply. Bitcoin's kind of like the gold to this industry, so I use it as a benchmark, but I use it synonymously as the entire asset class because it's just simply easier. I think it'll reach some ridiculous point and crash again, probably settling a lot higher than it is today. And that is because money is essentially being tokenized. Jamie Dimon from JP Morgan 3 years ago said, this will never work. And then a year later, he said, I was wrong. And then last week said, hey guys, we made JP Morgan coin, right? So if you can't beat them, join them. That's the kind of mentality that we're seeing. And we also know that the People's Bank of China is building a People's Bank of China coin, right? We're going to see a tokenized yuan, a tokenized AUD. We already have tokenized USD, and these are via private enterprises, but we're going to see sovereign states actually issue their currencies via blockchain sooner than later. And there's going to be an entire kaleidoscope of derivatives and other products to speculate and invest and hedge with, right? So option swaps, ETFs, it's all coming. Derivatives have happened to every asset class known to man to date. They will happen to this industry as well. So there's a common theme here. It's all about access. You need that minimal viable infrastructure that represents access, and then eventually you end up with more and more types of participation, activity, and usage. So I think the addressable market is essentially everyone with an internet connection. It'll be nice to send some kid in Ethiopia $1 via his $2 Nokia just because.